Ever wonder why financial discussions sound like a different language? Terms like accredited investor and private equity are code words designed to keep you out of the most exclusive wealth-building opportunities. But structured products, offshore accounts, and tax havens are the tools the rich use to build wealth, often at your expense. It's time to break the code and understand the secret language of the rich. Let's start with the basics. Capital is simply money. It's the cash you use to start a business or make an investment. Assets are things you own that have value, like your house, your car, or your stock portfolio. Liability is what you owe, such as your mortgage or credit card debt. Equity is the difference between your assets and liabilities. Basically, your net worth. Think of it like this. If you sold everything you own and paid off all your debts, the money you'd have left is your equity. Now, what can you do with your capital? You can invest it in different asset class like bonds. When you buy a bond, you're lending money to a company or the government. They promise to pay you back with interest rate. Stocks, on the other hand, mean you own a tiny piece of a company. If the company does well, the value of your stock goes up. Mutual fund is like a basket of stocks and bonds managed by a fund manager. This helps with portfolio diversification. Real estate is another common investment, buying property with the hope that it will appreciate in value. Every investment involves some risk. Risk is the chance that you might lose money. Volatility means how much the value of an investment goes up and down. A return on investment, or ROI, is how much money you make on an investment. A higher potential return usually comes with higher risk. Deciding where to put your money is asset allocation. A financial advisor can help you decide the best way to asset allocation. People with a lot of money use more complex tools. Hedge fund and private equity are investments available to accredited investors only. These investments often involve a higher degree of risk. Derivatives are financial instruments whose value is based on the value of something else, like a commodity or a stock index. They can be very risky if you don't understand them well. Tax planning is about finding legal ways to reduce the amount of taxes you pay. Tax avoidance is using legal loopholes to minimize your taxes. Tax shelters are investments that offer tax advantages. It's important to know the difference between tax avoidance and tax evasion, which is illegal. Finally, we have to touch on ethics. Insider trading is when someone uses non-public information to make a profit on the stock market. This is illegal because it gives them an unfair advantage over other investors. We've only scratched the surface of the financial language. There are many other terms to explore, such as annuity, alternative asset, high-frequency trading, and sovereign wealth fund. Additionally, the impact of globalization and monetary policy on personal finance remain areas for further analysis. Understanding these concepts and how wealth is built and protected requires continuous learning. If you want to keep learning, like this video, share it with your friends, and subscribe to our channel for more insights into the world of finance.